I'm Pastor Aaron Harris, and this video is about smart ways to invest $10,000. If you're watching this video, then congratulations. It means you either have $10,000 saved or you plan on having $10,000 saved in the near future. My wife and I are in a position right now where we have some additional money and we have to figure out where we need to put this money that is sitting in our bank account. The problem with letting a large amount of money just sit and rot in a bank account is it's actually losing value because the amount of interest that the bank gives you is usually under 1%. But inflation increases at least like 2% a year. And so really your money is losing value each and every year that it sits in a bank account. So in order to make sure you're not losing money, what you have to do is invest it. So in order to find out what's the best investment for you, you have to first ask the question of how long do you want to invest the money for? If you're investing it for 10 or 20 or 30 years down the line, then that's a lot different than if you'll need the money in the next 3 months, 6 months, 1, 2, or 3 years from now. So let's look at the different options of investing that you have, and let me tell you my thoughts of what I believe that we're going to do with our finances. Then I want you to tell me in the comments what you would do if you were us. The first thing that you can do is a low risk investment. Low risk investments are investments that usually gets between about 2% and 5% each and every year. Now, the reason they're low risk is because they're practically guaranteed. Nothing is fully 100% guaranteed, but they're as close to as guaranteed of a profit as can be, with minimizing your risk of losing your money. A few ways to invest your money with a low risk is by investing in things like a CD or a money market savings account, or you can go out and get things like bonds, and all of these will guarantee you about 2 to 5% interest on your money yearly, and they relatively have a low risk. Low risk investments are best for people who are investing for a short period of time, or for people who are nearing retirement or in retirement and they're not so focused on building wealth as much as they are on maintaining it. If you're looking to invest for long periods of times, we're looking at 4-5 years and above, then moderately risky investments would be your best bet. These would include things like index funds and mutual funds like the S&P 500 or various mutual funds that are offered, but usually you can expect to gain about a 10% return on your investment each and every year, and this moderately safe because it's packaged with a whole bunch of companies so that if one fails, you don't lose all of your money. What many people are interested in is high risk investments, especially the younger you are, the higher the risk you want. All of us want to learn how to turn 10,000 into 10 million. And so to do that, people are looking at things like individual stocks and businesses that they can invest in, or really the best bet that you would want to do is look at how you can use that additional money that you have to start a business so that you can generate more income. Just know that the high risk options are really risky. They have a really high chance of failure because most new businesses fail. So if you're putting your money in an individual stock or you're starting a business yourself, there is a good chance of failure. But when there is success, then you will actually gain a lot of money. And the quickest way to become a multimillionaire or a billionaire is to create and start a business. And so it's a risk, but the reward is great. And another option that you can look at is paying off debt. You can either have low debt, moderate debt, or you can have high debt. If you have low debt, that means your interest rate is probably below 3% or 4%, which means it's slightly above the rate of inflation. So if you pay it off early, it'll help you, but it won't help you really a ton. Moderate debt means that you have debt and it may be 6%, 8%, 10%. And the challenge with moderate debt is by the time you want to go invest in something, you have to ask the question of would your investment outpace the interest that you're paying on the debt that you have. So the rule of thumb is low debt, yes, low rates, you may want to wait on paying those off. Moderate rate debts, you might want to pay those off, but any high debt that you have, any high rates above 8%, 9, 10, 11, 12, 20, 24%, you definitely want to pay those off first because it's a good chance that your investment that you would make would not outpace the interest that you're paying on your debt. So the question that we want to answer is where is the best place for me to place the investment that I have, or maybe you to place the investment that you have. Now for me, the additional money that we have, we plan on using it between 2 and 4 years from now. Since we plan on using it between 2 and 4 years, that takes out any long-term investment options that we have. The S&P 500 would always be my go-to if I was investing for more than 5 years. But the S&P 500 has been hot lately, and year to date it has gone up over 22%. And so when you look at it, it's a good thing to buy low and sell high, but a lot of people buy high and sell low. And so mutual funds and index funds, they fluctuate over time. And so the challenge is when you put your money in you want to have it in at least 5 years, really 10 years is best, and no one has lost money after having their money in there for at least 20 years. But those are best as long-term investments. And so looking at the short period of time that I have, I'm not going to go with the index funds and the mutual funds and the moderately risky investments. Another thing I can look into is going with a high risk investment and starting a business where in the next few years I can make a great return on my investment. But the reason I won't go with that option is because with $1,000 camera, microphone that's a couple of $100, and a relatively good camera, then I can go and I can create all types of businesses. I can be a YouTube creator. I can go out and be a public speaker for no money. I can write more books without having to spend additional money. And so really I can pour money back into businesses that we're doing, but at this time, I don't feel like money is what I need in order for the businesses that I'm doing to be successful. So the option that leaves me with is either low risk investments or paying off debt. When you look at the low risk investment options, the highest that you can get right now is probably around 5%. But even if I were to go and take that 5% by putting it in a money market savings account, then what happens is you have to pay taxes on that money. And so if I pay 20% tax on a 5% gain, it knocks me down to about a 4% gain on my investment. Or if you look at it, what we can do is use that money to pay off debt. And the highest debt that we have right now in terms of the percentage that we pay on that debt is our house note, which is around 4%. And so then I would be looking at the best option for us being to go and actually put money into the house, put the additional money into the home by making additional home payments so that we're not paying as much in interest. One of the challenges with paying off a mortgage early or making additional payments is that it is harder to access the money that you put in because you can only access it by selling a home or doing some type of refinance or getting a home equity line of credit or something like that, which is a lot more challenging than like selling a piece of a stock or index fund or a mutual fund, or going to your CD or your money market savings account and just taking some money out. And so this is a challenging option, but I believe it's the best option for where we are at this time. And I would encourage others as well, if you're looking to invest, and one thing you can do is look at what is the debt that you have, what would it take for you to be able to pay that debt off, and what would your life look at like if you did not have that debt. Remember, I want your comments on what do you think the best thing that someone should do if they have an additional $10,000 that they're looking at. How can they spend it? How can they invest it? Do you believe that they should invest it in themselves so that they could get more skills? Should they invest it into creating a business? Should they go and put it into stock? Should they try to look at some lower real estate options? What is it that you are thinking that you would do with that additional income? What do you think that I should do in my situation with that additional income? And I'll be sure to reply to all of the comments. And if you have any great questions, then I may even make another video on that. So thanks for watching. And if you enjoyed this video, then watch the other videos on my channel, which is all about financial literacy.